You are 62 years old. The house you bought in 1994 for $320,000 is now worth $1.8 million. On paper you are a millionaire. In reality your money that you can easily access is tied to a pension that feels smaller every time you look at the inflation numbers. You sit in a kitchen with marble countertops. Wonder why you feel like you are falling behind. The house is like a safe. You are the one who guards it. You do not have the way to get the money out. You go to your bank. You ask for a 10-year loan to fix up the property or help your daughter with money for a house. The advisor looks at your birth certificate and your income statement and he says no. In the eyes of banks you are a risk. You do not have a job that brings in money. The system is designed for people who build things, not for people who live in them. You learn your lesson in the economics of getting older. The money you have in your house is not real until you find a way to make the bank give you the money.
The term is retirement interest, also known as RIO. It's not a loan, it's more like a special agreement. Unlike a mortgage, RIO doesn't have a fixed end date. The term basically lasts your life. You borrow $400,000 using your $1.8 million home as security. The loan is 22% of the home's value. That's low enough for the bank to feel comfortable. It's high enough to make a big difference in your life. The idea is straightforward. You don't have to pay back the $400,000. You just pay the interest every month. At an interest rate of 5% that works out to $1,666 per month, you can manage the $1,666 payments. You couldn't handle the $4,500 monthly payments a full repayment mortgage would require. The bank benefits because they get a guaranteed return on their money. You benefit because you get to use the money from your home without having to move out. This is what we call the final debt setup. You're not building up value in your home anymore. You're using it to live your life. You are 68 years old. The RIO is active. The $400,000 is gone. You used it to bridge the gap for your children and secure a lifestyle that the pension could not touch. The RIO has rules. The bank conducts a stress test. They do not care if you can afford the interest today. They care if your spouse can afford it when you are gone. If the survivor's pension cannot cover the $1,666, the application dies before it begins. The RIO is a test of partnership much as a test of credit. You realize that a RIO is different from equity release. With equity release, the interest compounds and it grows like a tumor, eating the house until there is nothing left for the heirs. With the RIO you pay the interest as you go. The $400,000 debt stays $400,000. It is a fixed rate. You have chosen to pay with cash today so your children do not have to pay with the house tomorrow. The lesson is delivered through discipline. The RIO is teaching you a lesson about the RIO and how it works.
You are 75. The market changed. Interest rates went up. Your RIO mortgage was fixed for 5 years. It is now time to renew. Your payment was $1,666. Now it is $2,400. The whole situation feels really tough. In an office someone else would handle this, but you handle it at home with your family. You realize that RIO mortgages are a bet on how you live and that the money stays stable. If your house value drops you owe more. If you get sick, taking care of the house becomes hard. You are not a homeowner. You take care of the bank's property. You sign the papers. You change your budget. Life goes on.
The end of the RIO happens because of one of two things: the significant life event. This means you die or you move into long-term care. The bank is not interested in you. They want the vault. You are. Your children get the $1.8 million house, but they also get the $400,000 debt. They have 1 year to sort this out. So they sell the house, pay the bank, and keep the $1.4 million. The RIO did what it was supposed to do. It let you live a life. A level 5 life even though you only had a level 2 pension. The downside is that your children do not get as much money when you are gone. Most people think a mortgage is a way to own a house. Rich people see a RIO as a way to use a house to get money. The house itself is not the thing, it is the money you can get from it that matters. You knew how the system worked and you played by the rules until the end. Now your life is over. The bank is already looking for the next person. Someone who is 62 years old with a house and no way to pay for it. A person with a vault and no key. The RIO is. The bank moves on to the next RIO.